Share screen. Can you guys see my screen okay? Can you guys see the slides? Okay, good. Okay, so today we're going to go over preparing for a career in quantitative finance. So there's some stuff. It's sort of okay, whatever. Okay, so the compensation in quant finance can be pretty high. Here's some numbers: 360K at Citadel or 2K to Sigma. It's pretty comparable to Fame, but at top firms, if you do some stuff, you can make a ton of money. Like, I'm gonna go over that later. And just a fun fact: interns at DE Shaw make like $83 an hour, according to Levels FYI. And interns that generally at like these top firms, like other than DE Shaw, like Sigma to Citadel to Sigma, Jump Trading, like all these top. If you go to one of these top firms, you can easily make $80 an hour, which is pretty crazy for an intern. A lot of these interns make more on an annualized rate than most of the software engineers. Okay, so here's some information about the compensation. There's far more variation because like there's just so many roles and like areas, like, and we're gonna go over like the different areas and roles later. And there's a lot larger right tail because if you develop a strategy that can generate millions, then your bonus can also be in the upward of millions. While if you were like a software engineer at Facebook, you can make like 600K a year or like $1 million a year. But it can be sort of capped because your impact, sort of like more of a cog in the machine. But like in quant finance, if you develop something that generates millions or billions, you can get to big bet. And then there are also cases of new grads making 400K at top firms. I think like the very best, the cream of the crop from Stanford or MIT can get these 400K roles, but it's rare, but it can happen. And generally in Fang, you can get like 200K per year, but the right tail of the new grad compensation in quant finance is generally higher than in Fang. But so with these super high salaries, so what's the catch? Well, not a guarantee against there's a high variation in quant finance. The interview process is generally more competitive, and imagine how competitive Fame interviews are generally, but make it like 50% difficult or twice as difficult. And on average, you might have more stress or worse work-life balance. And if you guys have any questions, feel free to like unmute yourself and say something or put something in the chat. And so there's a lot of areas in quant finance. When someone says quant finance, you don't really like in software engineering. If you work in software engineering, there's like sort of a general idea of what you might do. You can do like developing backend or developing front end or you can work on back end, front end, or you can do managing servers or whatever. But when you say quant, or you can do like testing, like develop unit tests or like a SDT. But in quant finance, there's just so much variety. There's like economic tricks and forecasting, risk management, derivatives, pricing, fundamentals, DAR, HFT. And that's just the areas of research. And then there's like different types of trading. You could do HFT market making, mid-low frequency trading, like maybe like on instant magnitudes of milliseconds or nanoseconds. You might do it on magnitudes of seconds or minutes or even days or weeks, or then you can do arbitrage. There's just a bunch of stuff. And you might not even do trading necessarily because you might be working in the banking industry. So you might do credit risk. So you take some parameters of a potential of a person who wants a loan. And so you can do some statistical analysis on what an optimal interest rate for that person or and how much credit you can give to them. And so you might also work in like the insurance industry or whatever. So it, and then there's like all these different markets: stocks, bonds, derivatives, like options, futures, swaps, mortgages. Well, maybe debt-backed securities. And then there's like a bunch of derivatives invented and sold by banks, cryptocurrencies. There's a lot more, real estate, whatever. I mean, but these are probably the most common that you can just easily trade electronically. And then there's like a bunch of different types of institution prop shops where they basically trade their own money or employee money. And so these tend to have like a smaller team. Or you can work at a hedge fund like Citadel to Sigma. You have your own internal money, like your employee money or some like the founder's money, but you can also take external money and trade it on behalf of clients. You can work at a bank. So Goldman Sachs has like a trading algo trading team and HFT team and whatever. So there's JP Morgan basically most banks. And they have different areas that they do work in. Like if you got to work at a bank, you might do algo trading, you might do interest rate forecasting, you might do credit risk. And then you can also work at wealth management, do more quantamental stuff, do some research, or you can work in a mutual fund, or there's a bunch of other different, or you might work at like some index. There's just a bunch of places you can work. And so you can see here from that there's a bunch of variety in the field. And let's talk about fintech real quick. Generally accepted, like Robinhood is sort of like fintech. Like even though there's all these different sectors of quant finance, the general consensus is that fintech isn't really part of quant finance, which is pretty funny. And if you refer to some like one of the top quant firms, if you mention it in an interview somehow, like fintech brings that up, and you somehow associate them with fintech, you'll probably be dropped from the interview. They're sort of elitist, but that's just how it is. So this is just something important to keep in mind. And the skill sets are quite different. Oh yeah, and then okay, so there's all these fields and all these markets, all these whatever, all these. But the big three generally is the quant researcher, quant trader, and quant developer. These are probably the most common roles, and they might have like different name. Like quant developer might be software engineer or whatever, and sometimes the quant trader might do some research or they might help with the development. So sometimes the distinctions can be sometimes blurred, but these are probably the three core jobs. Unless something people might think is like, oh, what happens if you can do like all three or like both quant research and quant development? It's like, it's like, well, so all the roles require programming skills, like, and if you know the infrastructure and you know the strategy development, you know the whole pipeline, right? And so intuitively, I mean, from this standpoint, it sort of makes some people think it makes sense for people to do the full stack. However, this industry is very specialized because it is a super competitive industry. And yes, you might know programming. Knowing programming is helpful for both, but there's just so much specialized domain knowledge. For like quant research, you need to know all the statistics and whatnot, and because you're competing with all these other firms, it's sort of like a winner takes. It's quant finance is generally like more of a winner take all system. So the general consensus is that you'd rather have a person who specializes in areas, like two people, like say we have two people, you'd rather have someone who specializes in development and one person who specializes in research, rather than two people who can sort of do both. However, if you do work at like a smaller firm where the infrastructure is less established, you can sort of do all whatever. And then, so let's see whatever quant researcher does day to day. They do like statistical analysis and what other types of analysis on data. They run backtests on strategies. They read and implement research papers. And there's some other stuff they do. And some recommended skills is like Python, math and data science, stochastic calculus, general research skills. And it is the most competitive and probably the most difficult role to land, but it's generally the highest paying roles. But it often requires a PhD. And so this is probably the role most tied to this is the role that is where your compensation is most tied to where performance has the most impact on your compensation. Because if you develop some like super good strategy, you can generate billions and billions of dollars for the firm. But if you're like a software engineer, you're working on the infrastructure, and yeah, you might make some improvements here or there, but you're not making some like crazy strategy, you're making it billions and billions. So that's why a quant researcher gets paid more, and because there's like a higher barrier of entry, because you usually need a PhD. And then the quant trader, they're more on the line. So quant researcher, you're generally like doing research or whatever. You develop some algorithms, but you might not be monitoring those algorithms. And so the people who monitor the algorithms are the quant traders, and they monitor the strategy performance and make sure that none of them are doing weird things or losing too much money. And if they do, they turn it off. You tweak some strategy parameters. And sometimes there's like automated trading strategies where you have some factors, and then if these factors meet some criteria, then you want to trade. But then you want some human execution on that side, because you want a trader to review the parameters, and then they want to look at the market, and then they execute it manually. So it's sort of like a semi-automated trading where there's like algorithms to do some computations, but then it's executed manually by hand. Or you have like trades that like you have to be approved by a quant trader. So like a trade request is put in by an algorithm, and then the quant trader like approves or denies the trade request. And you can do develop some trading tools, some things that like visualizes some factors or parameters, or like some indicators or whatnot. And some recommended skills is like programming in Python, statistics and probability, and quick thinking under pressure. And this probably on a day-to-day basis might be a little stressful, because the markets are constantly moving, and if there's a lot of volatility, then there's like a lot of yelling and whatnot. Sort of like, those like people on the floor doing trading, if you ever watch some finance movie. And so this is probably the least barrier of entry, because you generally just need it. Let's go, and I'm going to go over the academic and the recommended academics for this later. And then there's a quant developer. Sometimes they're also known as software engineers. And you're basically doing software engineering stuff. So you do the infrastructure like backtesting, live execution, and latency optimization. And so generally you'd want to know C or C++. Actually, something else for the day-to-day is like you convert. Let me just add this in right now. Like convert strategies Sorry about that. Okay, let's keep going. And so you probably want to learn C or C++, because a lot of the stuff is latency sensitive. But some firms use Java or C# or some other language like OCaml or whatever. Or they use Golang, or I don't know. Or they use Python if it's like lower. But I'd recommend C and C++. Possibly some linear algebra and general software engineering skills. Probably the least tied to performance or strategies because you're more on the infrastructure. You have like less impact on performance, but you're still very important. And this is general things. It might be different. Some firms might just like have like a bonus equal for all three roles, but everything's highly variable and a lot of stuff is under non-disclosure agreements. So sometimes we might not even know. Okay, so and then some other areas are interesting. A big thing in quant finance is HFT optimization. It's pretty interesting. So sometimes you can develop specialized hardware like custom chips. Like you have some like reroute some like the paths on the chip to shave off nanoseconds, or you can optimize some code like C++ code, C code, or you can even optimize the compiler itself. And some fun facts: spread network spent 300 million to shave off the millions. On cables. But after that 100 million spent, it's obsolete because of wave technology. And then there's this thing called negative latency, where you do partial packet reading. So like say you get some price data, you read some partial packets, and then you're for the rest of the. So there's some crazy stuff in HFT, and it's pretty interesting. It's pretty difficult, but it pays really well. And there's risk modeling, and you can help banks and other institutions limit the risk. And this is something that really popped up after the 2008 financial crisis, because if you guys know about the 2008 financial crisis, it was caused by over leveraging and people taking too much risk. And so there are a lot of regulations put in place. So this is where risk modeling comes in and help banks and other institutions keep their risk within the regulation guidelines. And so no finance, look, we talked about you want to learn math, data science, programming, I don't know, whatever, all this stuff, math. How come finance isn't one of the mentioned things? Well, quantitative finance generally rarely has people who major in finance. And in fact, if you major in finance, it's probably worse than having no major at all. Funnily enough, may or may not. Well, they generally probably don't. And so, like, why is this the case? Is often they teach you the finance that you need to know, and the financial theory that you learn in finance classes might even hurt you because they reject a lot of the financial theory that you get taught in school, like the efficient frontier and efficient market hypothesis, and they think it's mostly bunk. And so the exception might be some advanced financial theory like option pricing for smaller funds that can't teach you this stuff. Okay, so let's go over some general career information. Compensation can be high. It's also highly variable. Well, it's sort of like mutual, what do you call it? Like interactive, because it's highly variable. It can be high, but because of high work weeks in the second bullet point, it might be less on a per hour basis. And so companies like DHL and Citadel generally have longer work weeks, but places like 2 Sigma and SAG, 40-hour work weeks are far more common. Interviews can be very difficult. Environment can become for some places, but like places places with lower work, shorter work weeks tend to be more collaborative. You can ask anyone, while like some places can be different, sectioned off into like different teams where each team are competing against each other. And because it is a finance industry, it has like the finance stuff, but some of these hedge funds try to act more like tech companies like Sigma. Okay, and larger firms are generally open to new guys because they have the more resources to train someone from scratch. So I'd recommend applying to larger firms. Smaller boutique firms often have to poach experienced people because, like, if you have like 10 people, you don't have the resources to teach someone all this option theory, all this like best practice. Like, they don't have the resources to do that. But this might not be always, and this is on a general basis. And you can expect to live in New York, Chicago. There might be some exceptions, like 2 Sigma, you work in Pennsylvania, or Trebot, you work in Missouri, Kansas, Missouri. And something about academics, quantitative, because there is this finance side of it, it has this elitism. But even at the companies that act more like tech companies, they're still elitist, a little elitist. So you want to have a high GPA, undergrad. You might want to do undergrad research. You want to go to Ivy League, go to like school like Stanford, MIT, Caltech, public school like UC Berkeley. Unfortunately, because I'm just gonna be honest, I don't think UW is really of a target school compared to like places like Berkeley or Stanford. But we do get people, but it's better than going to like some WSU or Gonzaga or something like that, because we still do have D. Shaw and 2 Sigma come here frequently. I'm not sure. I think 2 Sigma and D. Shaw are the main ones. Maybe Citadel. I think Citadel comes here too. So a few firms do come here, but we're probably not target school compared to Stanford or Berkeley. And for the academics, quant research, a PhD in STEM is highly recommended. But even if you do get a PhD in STEM, you might not even be able to get a role in quant research because it's so competitive. And getting PhDs in STEM isn't even that, is really difficult. So it's something you have to really want to do. And I wouldn't recommend getting a PhD in STEM if you want to do quant research. To be honest, I'm just gonna be real. Reality check for you guys. And the quant trader, you want a bachelor's in STEM, like electrical engineering, physics, or whatever, or even computer science. And if you're a quant developer, you probably want a bachelor's in CS. And it doesn't hurt to have a master's. It'd probably help if you have a master's. So let's go over the interview topics. Quant researchers, there's a ton of interview questions like linear algebra, statistical ML, neural nets, maybe. Generally, neural nets is, except maybe NLP, but neural nets are generally not very useful in quant finance. Calculus, stochastic calculus, sometimes you might get leak code. Brain teasers, and then at smaller process firms, you want to know like these advanced financial theories like option pricing, volatility services, and advanced math finance theory. If you're a quant trader, you want to know some Python programming, mental math, and the mental math is more like doing the online assessment stuff. Brain teasers, probability statistics. You probably don't need to go into like super crazy stuff that you need for quant research, like machine learning, stochastic calculus. You don't need that for quant trading. And you also want to know some great game theory, and this sort of types into the brain teasers. Okay, and then interviews quant. So it's basically something more important, more emphasized on the quant developer side is knowing multi-threading, knowing about latency, specific C and C++ stuff, maybe linear algebra, maybe probability and statistics. I mean, probability and brain teasers, because there's some like probability and brain teaser are just general quant finance questions, but it's just very similar to like software engineering interviews plus some other stuff that might come up. And so okay, and so this is one of the main books, Practical Guide to Quant Finance Interviews. It's pretty good. I'd recommend it. Quantquestions.com. Sometimes you can Google like interview questions, like 2 Sigma interview questions. Like you can 2 Sigma interview questions. Glassdoor. And you can just go through these for like the top firms, just like Google like top quant funds, and then just go through all these. And that's a really good resource, especially if you're interviewing there, right? The questions might not exactly, but it's similar, I'd say. Okay, so I talked about all this stuff, right? Well, so like, why should you believe me? Well, I interviewed Internet Quant Connect, algo trading platform, and internet trade firm, like crypto trading, algo trading firm, market making. They do market making, whatever. And so I was pretty interested in it, career in quant finance, so I did a lot of research on this stuff. Yeah. Does anyone have any questions? I think maybe some like good questions might be like what I did with work or. Okay, so maybe let me ask you. So what role are you guys interested in? Quant finance? I mean, quant researcher, quant. Like, what areas are you interested in? Like, quant researcher, quant trader, quant developer, and like maybe what do you want to do? Option pricing, math, HFT optimization, or crypto, or whatever. You guys have like any questions? That is a good question. Yes, it is possible. There are quant researchers at TC Megama who only have a bachelor's degree. However, he was a Stanford. He went to Stanford. You can sometimes there are things like a CFR degree. I mean, computational finance, quant finance, or math finance, financial engineering, whatever it's called. You can do one of those masters and try to line up position research. It is very difficult. I'm just gonna say that, but it is possible. So I think at minimum, well, I think something you can do is you can apply to like places like Two Sigma, Citadel, or whatever as a quant researcher with an undergrad and a bachelor's in like some STEM field. And if you don't get into any of them, then you do a master's in statistics or master's in like AI or some other master's in physics or some master's degree, and then apply again, try again. But if you can't land a job by then, it might be difficult. But you can easily pivot into data science though. So if you really want to do this, by all means, apply with a bachelor's and do a ton of interview prep. And if you don't get into, do a master's and do a ton of interview prep. And if you still can't get into one of these firms, then go into data science. So that's my advice for you. Does that answer your question? Well, okay. That's a good question. I really like that question. Any questions about my whatever I did at work or more career stuff? Okay, maybe I'll talk about how to get an internship. It's really, I'm just gonna say this. It is. I personally couldn't get any like internships at Top Fun. I was able to get to the interview rounds and get past a few interview rounds at like SIG and whatnot. But so what I did was I applied to like random small places. Actually, if you want to do quant researcher, it might be hard to do a small. I think applying to smaller places is less competitive. So what I recommend is like maybe applying as yeah, you can definitely apply it as like smaller, more startup like trading places that like don't even have a lot of infrastructure. So maybe you can apply as a software engineer or like a quant dev and do some like development on their infrastructure, and then talk to people there and ask if you can do some quant research or whatever, and you can sort of do both. But my advice is just apply to a ton of places and definitely nail down the interview stuff, because once you get to the interview stage, it's all about the interview. I think prestige matters less. I mean, prestige definitely helps get you through the interview phase. I mean, get to the interview phase, but once you're at the interview phase, it's definitely a lot of definitely you got to nail that interview, and the interviews are very difficult. Okay, so if nobody has any questions, let's talk about like, okay, so if you want to officership, if you want to apply to be an officer, email me or email the I'd recommend email me because I don't check the ATC email every day. Let me just type this in the chat. Let me just post this. Let me just share this in the chat. Yeah. Okay. Anyone have any questions on this? Okay, thanks to everyone who came today. I'm just gonna stick around for like a few minutes, but you guys are free. That's it for today. So if you guys are free to leave, and feel free to email me anytime if you want some career advice. Okay, thanks you guys for coming.